Well, Happy New Year from Don Gatling with the National Real Estate Cafe, where you get your daily dose of real estate market updates. And no Gino today, he's off for good behavior, skiing with the family. How about that? But yesterday, what a way to start off the stock market, huh? A big crash. So I got this cool little clip from Yahoo Finance that kind of explains it so you don't panic so much. And it'll give you a little bit better insight of what happened yesterday.
A little bit of a roller coaster ride. I mean, I have all these great words for sell-off, but then we came back. It's not as bad as we thought. How come?
Well, I think that people kind of ran out of selling momentum, if you will. I mean, it's unclear, of course, you know, when you have these sort of down 2%, down 1.5%, we're all sort of in the same neighborhood. The big news, of course, was China.
So let's start with China. I mean, stocks hit hard after more data coming out of there that is being interpreted as weak for their economy, triggering actually some circuit breakers there in the process. What's behind these major fireworks right now?
Yeah, there's sort of at least three things going on in China on the last couple trading sessions that led to today's mini bloodbath, if you will. First of all, there was a weak manufacturing number that came out. That is a continuation of a story that we've seen, you know, going back probably 8, 9, 10 months now since the beginning of the summer. And so that's not really a surprise. A couple of other technical things influenced trading there that influenced trading in the United States. Number one, you mentioned the circuit breakers. Today's the first day of circuit breakers in China, and so it's not surprising maybe that we tested those. And then the third thing, or the second technical thing, involves the end of a lockup period for institutions, allowing them to sell. That lockup period ends a few days from now, but the thinking is that some investors are getting out before these institutions will be allowed to trade these blocks, and the thinking is they will be selling those blocks, so people want to get out in advance of that.
So we're going to talk more about China in a bit. We actually have a guest coming up to figure out, you know, is it
All righty. So hopefully that gives you a little bit better idea of what kind of happened. It's a lot more than just China slowing down. They've been slowing down at a pretty standard pace. Nothing to panic about, but I wanted to show you that because a lot of the media is going to jump on that we're in a really bad place. So here's another slide that's going to give you a little bit better idea. Also, there should be some concern, meaning you should talk to a professional, a financial planner, because according to this chart, a lot of the media is going to spin about how overvalued our stocks are right now. You can see by this chart that we're actually overvalued. It's only been a couple times in our history that the stocks have been at this level. 2000, we had a crash after that. 1981, a crash after that. 1929 and 1901. You see a pattern here? So there could be a correction. Again, nothing to panic about. This could go on for years at a level near where we're at, or we could have a correction. So just want to let you know to pay attention and talk to a financial professional that really sees what's going on and can protect you and keep you informed of what's really happening in the stock market. So I just want to give you a little bit of update right here on the National Real Estate Cafe. You can receive these daily right to your phone by texting NREC to number 58885 or check out our website. Lots of great information by going to nrecafe.com. We'll see you tomorrow.